Our next guest is three names that he says are going to drive us to new highs. Chris Verrone of Strategas is over at the Plasma. Chris, what are you looking at?
Hey, Melissa, well, let's start with the name of the day. That's obviously JP Morgan. I just want to put this in some context. Remember, back to the 2016 lows, JPM was a $50 stock. It goes 50 to 120, and then it hits a wall in January of 2018 at about 120, and we get just 2 years of dead money. Now, where was the S&P 2 years ago? Roughly the same level, 2,900, 2,950. So let's zoom in here to these 2 years of indifference, and let's see if we can learn a little bit about where this one goes next. January of 18, 120. Another failure at 120. Another failure at 120. 4 or 5 times along the way, we've been unable to overcome those prior highs. Why do I think this time is a little bit different? Well, for one, the moving averages are now all upward sloping again, 50 back above the 200. And I think importantly, the yield curve is steepening. It was flattening this whole move, now steepening. So there's a change in character in this chart. When we look at this range, 120 to about 90, 30-point range. You get a breakout here above 120, you're talking about a $150 stock. We think ultimately that's where this thing is going, one of our favorite big cap bank plays. Second name, in terms of a bellwether, Deere, industrial, been at the center of the storm this entire China trade. Stuck here near 170. We've been here before. We failed in the past. What's a little bit different this time? The bears had every opportunity to finish this thing off 4, 5, 6 weeks ago, and they couldn't. They had it on the ropes, but they couldn't deliver the fatal punch. Boom, come right back at the highs, 170. This is about a 30-point range. You're looking at a $200 and $205 stock if you can get a breakout here. We think you do. Again, 50 back above the 200. We held support. 200-day now upward sloping. So the technicals are improving, even though not much price progress was made here. And then lastly, so we have a bank, we have industrials, and we have some tech. This is Alphabet. I think this is another example. This is an $800 billion company. Another example of a big mega cap bellwether acting better than the consensus is giving it credit for. 20% drawdown in spring of 18, another 20% drawdown last year, and another 20% drawdown earlier this year. So we're looking at 3 bear markets in this chart over the last 2 years. I don't think we get a fourth. We have the technicals improving, 50 back above the 200. You held support the other day. 1240, 1250 is where we trade today. We're talking about a 300-point range from high to low. You get a breakout here, you're looking at a $1,500 stock. So between Alphabet, between JP Morgan, between Deere, these are bellwethers sending a very powerful message about this market that we think it's going up.
Come on over, Chris.
Bring him over.
Will will bring the chair in. Come on, Will.
Will does an amazing job. You know, by the way, Will is a Harvard grad, much like yourself.
I know that. Yes.
And he went to the actual university, not the online academy.
I'm going to leave that where it is. In terms of these 3 stocks, Chris, are these 3 stocks outliers compared to their peers, or are they representative of their sectors?
Well, I think what's remarkable here is the market knows a lot more than I know, or you know, or you know. And I think when you look at some of these bellwethers over the last couple of weeks, across all different sectors, right? Industrials, Deere, JP Morgan, banks, even Citigroup acting better, Taiwan Semi in the semi, Samsung, big global bellwether. These things are breaking out at 2-year ranges, right? So how many more of these do we need to see before directionally up has to become the base case? And I think that's the environment we're in here. And I love the fact that the IMF downgraded growth today. I love it. I think it's such a great contrarian signal that just as things look like they start to get better, the IMF wants to take the other side.
But Chris, couldn't you say for every Deere there's a cat, for every Google there's an Amazon, for every JP Morgan there's the regionals? I mean, like they kind of balance each other off in a lot of ways, and I don't really see picking out 3. Listen, those are good-looking charts.
Yeah.
Okay, they are, and those companies they probably have pretty decent fundamentals, good valuation. But I can find another one. You know, I'd argue to you than say that Amazon's almost more important than Google. I would say that I just don't know. You know, I mean,
it's certainly a very good point. But let's rewind the clock back 12 months ago, right? Sitting here, October of 2018, there was only one place in the world to make any money. It was FANG, right? It was the only game in town that worked. Today, you have other parts of the world getting better. Europe trades great, even parts of EM better. Industrials, for the first time in 2 years, show some signs of life. I think what's notable about that sector, if you look at it equally weighted, it's already broken out, right? So the average industrial stock is actually trading better than the CAT or the Boeing. So there's some signs under the surface that, hey, maybe directionally up, which is the least populated call, is the right one.
Implicit to all of these charts, though, Chris, is your broader call that the markets will, in fact, hit new record highs and well beyond 1% higher, or?
Yeah, I think this is a directional move. You know, we have the combination of bear sentiment and good seasonals. That's a powerful or potent cocktail, I think, for this market to rally into the back half of the year here.
Okay, Chris, great to see you.
Thank you.
Chris Verrone of Strategas.
John Deere, I mean, it looks very much like Apple looked a couple weeks ago, the same way that JP Morgan looked. The Deere 172 is the same level of trade, I think, in January 2018. I mean, valuation, I don't know, 16 times in this environment. I think it's a little rich. They report on November 17th. We'll see. Again, if you're trading it, if you've enjoyed this run up, and it has been a decent run up, I think you take profits here in DE.